Hey guys, so if you've been looking around at some of the media news, then two terms you might hear are bull and bear. What exactly does this mean? Why do they refer to animals? And what does this have to do with the stock market? Well, stick around to find out. Hey guys, if you're new to this channel, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We talk about mindsets, strategies, techniques, and resources that you should know to help you in your financial journey to build wealth. If you haven't yet, please like, comment, and subscribe. We produce quality content every week. So what does it mean when the markets are bullish or bearish? And what does it mean when people are bullish or bearish? These terms actually refer to a characteristic or psychology of the person or market. Being bullish means that people are expecting the stock or the market to go up. If a person's bullish, then he's optimistic. He thinks that prices of the stocks are going to improve. If the market is performing bullish, that means the market is likely to be on an upward trend. And bearish is just the opposite. A bearish person is someone that's pessimistic or negative in their view of the market or a particular stock. And when referring to markets, a bearish market means that it's generally on a downward trend. That's wild. That doesn't make any sense, right? Well, here's an analogy to help you remember how the markets move and their relation to the bulls and the bears. When bulls attack, they generally move their head up in an upward motion to attack and thrust. Bears, on the other hand, swipe down, generally showing a downwards movement. And so if you can remember those two actions, that'll help you to remember how bulls and bears move, both in the market and in terms of an investor psychology. Well, what do you do in a bull market? Well, because prices are generally perceived to increase and because the market's generally increasing or showing positive performance, the best thing to do is get more stocks, get more assets, and get more things added to your portfolio. As the market increases, so will the value of your portfolio. Well, what do you do in a bear market? Unlike a bull market that's showing a positive growth, a bear market is just the opposite. You're showing a negative growth. I know it's tough. I know emotions come into play. But one thing you should do is to reassess how you value the companies that you're invested in. If you see long-term growth in them, then you should keep them, because selling them just locks in your losses. According to an article written by Fidelity on the previous bear markets, there have been 15 total bear markets in the past since 1929. The key takeaway from this paper is that all of the stocks that have shown a decline in the bear market have since then recovered and showed sizable gains. During a bear market, if you're invested in companies that you believe in and that you believe will show growth over the long term, then you should stay investing in them. One strategy that you can implement during a bear market is dollar cost averaging. This will allow you to invest in your companies and gain more stocks as the prices go down. Because you're invested in a company that shows long-term potential, then a bear market is the best time to gain more shares of that company. And when the markets change from being a bear market to a bull market, you'll be on the positive side of things, because you've been able to gain a lot of shares of the company during the bear market. If you don't know what dollar cost averaging is, then take a look at one of my other videos on my channel. I go into detail explaining what dollar cost averaging is and some of the pros and cons between dollar cost averaging and lump sum investing. Hopefully now, when you take a look at all the research online and some of the analysis of stocks, you'll better understand what it means when bulls say and bears say this. As a recap, bulls are generally optimists. They see growth in the market. They believe that the market is on an upward trend. Bears, however, are the exact opposite. They're pessimists. They believe that the stock prices and the market will be on a downward trend. The biggest question now on everyone's mind is, are we currently in a 2020 bull market or bear market? One of the most commonly accepted definitions of a bull market is a situation in which stock prices rise by 20%, usually after a drop of 20% and before a second 20% decline. By contrast, a bear market is when stocks fall 20% from their most recent highs. Regarding the 2020 bull market or bear market, we'd have to still see. However, according to a recent article, 2/3 of fund managers believe that we're still in a bear market. And so, as you're doing your research, just keep that in mind. Take a look at the overall market performance and see how it's doing. Is it 20% up from its most recent decline, or is it 20% below the highest highs? Those are two indicators that you should be looking at to help make your conclusion about whether you think this is a bear or bull market. Let me know in the comments down below, what do you guys think? Is this a bear market or a bull market? I'm interested to hear your analysis and why you think we're in either a bear or a bull market. Also, if you haven't yet, follow me on Instagram, Romel Building Wealth, or on Twitter at Romel BLDG Wealth, and we can connect there. I hope that this helps to clarify what bulls and bears are. After all, it's wild out there. If you haven't yet, please like, comment, and subscribe. We're a new and growing YouTube channel, and anything you can do to help support us is greatly appreciated. For those beginners looking to start investing and don't know how to start, one of the best ways to start is by doing fractional shares with M1 Finance. If you don't know what that is, go take a look at my channel. I show you with full visibility my account portfolio and an overview of how M1 Finance works. Thanks all for watching, and I'll see you on the next one.